Hi, everyone. Welcome to Forbes Talks. I'm Diane Brady. I'm here with Peter High, who is the founder and president of Metis Strategy, and I think more importantly, Peter, a longtime contributor to Forbes. Actually, I believe you founded the CIO Summit, did you not?
I did. Very proudly. Yes. Thank you for
Yeah.
mentioning that, Diane.
So I want to talk about just the landscape looking ahead and what's that sort of unique role that the CIO has. What are you seeing right now?
Yeah, it's a role that's been around for decades, but one that really just in the past, call it 12 to 15 years, has gone through remarkable growth and influence, Diane. This was historically a support organization. It was a chief in title only. They typically reported to chief financial officers, which spoke volumes to the extent to which these were costs to be managed as opposed to truly strategic
Yeah.
drivers of the organization. And what's been so exciting is the degree to which, at least the best among them, and companies who appreciate bringing on the best among them, the extent to which they're really sort of operating as the central nervous system of organizations, that's what they really feel like they run. I
Well,
would also add that one of the greatest changes that has happened is the extent to which they are now influencing customers in addition to companies. It was also historically an operational and thus internally focused role. And that's where the innovation was. And as a result of that, the prime value they were contributing was one of efficiency. And so bottom line as opposed to top line. And what's so exciting is now as we all, of course, are online so much more and comfortable buying things online, engaging with business partners of ours through digital channels. And of course, all of this accelerated tremendously through the pandemic. CIOs now have a much more profound impact on not only the internal operation as they have for some time, but now to a much greater extent, customer experience, and frankly, also revenue possibilities for organizations as well.
I'm presuming that's because, digitization is so core. We're at this cycle of innovation right now where companies are transforming. If you link that against what's happening with the economy and we look into 2023, is that going to slow down or is it going to accelerate? Because there's the cost savings, then there's the revenue opportunity.
This is a fascinating question you ask. And one of the fascinating observations I have, I believe, anyway, you'll be the judge of that, is if you take the economic crisis of '07 and '08, Diane, one of the first areas that was cut during those times was IT budgets, IT staff.
The financial crisis, right?
Exactly. That's right. The Great Recession. And part of it was, again, the extent to which this was viewed as an esoteric part of the organization that was not, little understood by those people that didn't have technical backgrounds. Again, a degree removed from the CEO's strategy setting table. It's just a part of the organization where we could easily mete out some savings. Fast forward to today, and most of the predictions are that though the growth in technology spend is likely to come down, it's not most are predicting anyway that it's not going to go negative. And I think a couple of things, I hearken back to some of my earlier themes in terms of the broader contribution and value that's being created using technology and the digitization that you correctly noted, Diane. I would also say that it's now appreciated to a much greater degree as, again, not only a source of resilience, but frankly, if you are going to get to the point as now some remarkable stalwarts of industry are of cutting staff, that actually technology is necessary to take over some of the responsibilities those people once had. Perhaps, finding data and analytics means of doing the work that were once manual processes done by human beings to grossly oversimplify to make the point. And so I think what's really, a sea change across enterprises is the degree to which this has actually become a part of the organization that it seems to be holding up reasonably well in the face of growing conservatism budget-wise. And I think it's, again, that greater appreciation.
Right.
I'll add one other wrinkle, if you don't mind, Diane, and that is, of course, this is a part of the organization that is also responsible, typically anyway, for cybersecurity. And that is a budget that is not going to go down, I don't believe. The moment that happens, the enterprise and the executives are putting themselves at risk potentially of more profound issues. And so I think the extent to which the CIO has both holds in the balance measures of innovation, risk taking, if you will, as well as risk mitigation in the form, for example, of cybersecurity, positions them very well to help during these very trying times.
Well, you raised one thing that's interesting, which many things that are interesting, but the layoffs that we're seeing in big tech. What do you make of that, and what does it say about really enterprise tech?
Yeah, it's another great question. I appreciate, Diane. It was fascinating to see how most industries in mid-March of 2020, excuse me, when the pandemic and its broader impact was being fully realized, that most companies, their stocks went down naturally, as the market did, generally speaking, and it was unclear as to who this was going to impact the most. There was just sort of a suggestion that this was going to be perhaps akin to 07 or 08, perhaps even as a best case scenario, and more like 1929 potentially as a worst case scenario. And as it turned out, the companies that turned right around the fastest were, in fact, those technology companies that you were just noting. And you look at the outsized performance across most indices in the interim between then and now, or let's say then and a few months ago. And it was the Amazons and Googles and Netflixes and Microsofts of the world, to name just a few prominent names, that were doing extraordinarily well, and in fact the prime contributors to the rise in the indices. Now, they then fueled that, but bolstered by that extraordinary confidence and the fact that they were sort of running contrary to the prevailing narrative not that far before that, started to invest heavily in growing their teams. And I think what we're seeing now, frankly, is an understanding that this is likely to be an economic, let's say, a headwind that is going to start to impact them such that their growth levels are going to slow, in some cases potentially go negative. And they have a lot of, they've hired more people perhaps than they should have, based on the optimism they had with their growing stocks and their outsized performance.
I would bet there's a reluctance to let people go, given all the talent issues we've seen in IT.
Yeah, that's really true. And in fact, it's kind of interesting. I was just reading an analysis, Diane, where the primary layoffs, at least currently, are actually among those people who are hiring the most, those very same companies that I was referring to most. And it's fascinating, at least as I speak with my various contacts who run technology for the largest enterprises here in the US, most of them are actually not going through layoffs, as I alluded to earlier. And I think generally speaking across their organizations, they're conservative to be certain. And I don't mean to paint with such a broad brushstroke. Certainly some are curtailing hiring and maybe even laying some people off. But I think you're right. There's also, I think, a feeling like, well, gosh, last time around when we were supposed to have this crazy economic disaster, it didn't come to pass. And so I don't want to be the one person who's laying off my best people, only to find that it wasn't actually the nadir of the decline wasn't so deep, where others are now going to start to steal my best people that I've just laid off. Well, so I think you're right. I think there's some people are hedging their bets as a result of that.
I want to tap into your soothsayer part, and maybe this is just what you're hearing, but various things are always in the hype cycle. And let's take crypto, bad name. Has that had an impact on thoughts around blockchain, or what are we seeing there?
Sure. I think that's true. I do think that at times it's conflating issues and throwing the baby out with the bathwater to some extent. But that said, the direct answer to your question is no doubt that's the case, that there are people that are now bearish on blockchain because they are bearish on cryptocurrencies as a result of the remarkable decline and of course the FTX news and all these sorts of bad headlines and much worse consequences of organizations going down and so forth. But I do think there's a lot of distributed ledgers that remains as potentially valuable for companies. And indeed, I think depending upon the industry, if you're a financial services organization, a general financial services organization, not a crypto-centric one, you're likely still investing quite significantly in underlying technologies associated with the blockchain. Although it's been fascinating, Diane, I hasten to add on the heels of that comment that maybe 3 or 4 years ago, when we were polling our technology contacts to determine those areas that they were most curious about or investing the most in, blockchain was regularly in the top 3, let's say. It's now much less so across a variety of industries. And this, by the way, dates till before.
Not because we get it. We were doing it. We know it. We're not curious about it so much as we're just spending on it now.
I think actually there are some organizations that have been less inclined to do so. So, I mentioned financial services as a prominent proponent, an area in which value has been derived through blockchains. Mm-hmm. I think there are other organizations that have investigated the necessity of making significant investments in these areas and have said, I not that I won't ever do it, but it's not for me right now. We've dipped our toe in the water. We're not ready to jump in such that the water's up to our necks. So I think.
Go ahead. No, go ahead, Peter. I'm curious, what are the priorities? I mean, again, let me talk about Web3, and that's you could drive a truck through it, but what are the investments being made there, or is that an area that'll be put on hold?
In terms of blockchain?
No, just Web3, metaverse.
Web3,
this whole
I missed
idea
that.
Around, as companies look at it from an enterprise point of view, training, et cetera, is that likely to accelerate? Because it could be a cost saving, but there's no question it's going to be an expense up front.
Exactly. And my own thought, Diane, is that it's likely to be perhaps less of an investment made in some of those areas, as some core technologies may be greater sources of both efficiency and potentially a hard-won revenue during times where that might be difficult. For example, and allow me to drive a truck through, get to raise a subset of Web 3.0, but nevertheless a topic that you could drive a truck through, and that's just data and analytics, generally speaking. I think this remains a priority. We are seeing still number 1 or number 2, even during these times for organizations, better sorting of one's data, parsing of one's data to be able to make more fine-tuned decisions, and frankly, just advancing their capabilities such that can be sort of an ongoing source of strength for organizations. So we're seeing kind of a doubling down in those areas where value is already being derived, in the hopes that new value might be created where there's perhaps more limited opportunities for that in more traditional areas. But some of the the particularly innovative, and in some cases a little bit further out there, like the metaverse you raised briefly, I think there are a lot of people that are kind of in a wait and see mode, and probably waiting for better times on the other side of this to really test that more fully.
So I want to come at you as a CIO. Let's say I come to you, I say, Peter, what are the biggest risks that you're seeing right now in the environment for me, and the dumb money, the smart money? What would you put on my radar as a common mistake that you're starting to see, or something I should be aware of that I might miss out because I'm worried about the economic climate?
Well, gosh, there are a couple. Let me be little bit provocative. If I could be a little bit provocative, I think that one of the areas that we always, as humans, we have a recency bias. And boy, what extraordinary times the past 2.5 to 3 years have been through the course of the pandemic. And it's really changed the nature of how we work and our expectations, whether we want to do work in an office place, for example, and how we think about collaboration and forging a great culture within the enterprises that we're a part of. And it's funny, if you think about in 2019, and basically for the history of business prior to that, work was done in an office. Somewhere between 95 to 98% of work was done in an office. If you or I got a different job, the expectation we would have going into that is we would likely change our commute, maybe change our city as a result of that new job. Now, all of a sudden, come March of 2020, and in the months after that, once we recognized this to be a prolonged way of working, all of a sudden employees gained power they didn't really think they had. I didn't know they had. It didn't even think to ask to have. And it's been a fascinating dance between managers and managed to determine how is work going to be best done? How will we collaborate best? How do we take into considerations our personal lives and balancing that with our professional lives? And there's so much that is, I think, based the logic associated with that, based upon kind of 2020 or 2021 logic, as opposed to the potential impacts of a downturn. I'm beginning to see greater evidence of technology organizations, but companies more generally speaking, thinking a lot more about how do we use this as an opportunity to encourage people to come back into the office to a greater extent. Very few 5 days a week, mind you, but to a greater extent to facilitate greater levels of collaboration and innovation, especially in people-centric or service-centric businesses. And I think depending upon how long any sort of an economic malaise might be, I think you'll see employers exerting much more influence from that perspective as well. No. So I think I use that as one example of how we have this recency bias, that how we've been working in the past couple of years is likely to be how we continue to work. Certainly things have changed. Please don't take me to suggest that we're going to go back to 2019 means of working. But I think there are some aspects of the prior times that will likely draw back into our experiences.
So Peter, I know this is Forbes. We're all about money. I know you can't talk specifics, but can you give us some indication? It sounds maybe flat or slightly up, but the kinds of budgets that people are really have empowered with right now. Any percentages, any figures you can give us as to what you think's likely in 2023?
Yeah, most of what I'm seeing is flat to a little bit up in terms of technology. Now, this is where we sit as we have this conversation in late 2022. What people are at least currently predicting, in my own polling, also what I'm reading from groups like Gartner and Forrester who are doing the same among their ecosystems, that if you take this across industries, that it's not yet gotten to the point where the predictions are significant cost decreases within the tech domains of organizations. And again, I chalk that up to a recognition as areas of really kind of levers to pull during times of great uncertainty to foster resilience. Now, of course, depending upon how things continue to progress or regress as the case may be, we may see a different reality when push comes to shove. But as of now, it appears as though, remarkably enough, those budgets are holding up.
Right. Something about inflation, too. You want to get in, buy it now before the prices go up even more.
Yeah.
Thanks very much for joining us, Peter.
Diane, it's always a pleasure to speak with you. I'm so grateful for you including me in your session here today. Thank you.
Great.